Well, good morning to everybody that's here. You just got your little pop-up that we are going to be recording this. So I am Kristen Schrader, Business Development Manager with Harkins Builders and your 2020 CREWBaltimore President. Very excited to have you all here again this morning to continue with our weekly virtual conversation over coffees on relevant topics for today. Just to start out, I want to thank all of our sponsors, our annual sponsors, gold sponsors, Harkins Builders, JLL, Miles and Stockbridge. Silver sponsors, Absolute Services Industries, CohnReznick, Copt, Crammon and Graham, Badova Engineering, Rosenberg, Martin, Greenberg, the Brick Companies, Rockefeller Group, and our bronze sponsors, Allsafe Elevator Inspections, Sonero, Charm City Concierge, Gradeline Construction Company, Howard Bank, Infinity Environmental, Katz Abosch, Land Care, Merit Companies, Mona Electric, My Cleaning Service, Omega Fire and Life Safety, Pennsylvania Architects, Price Modern, Rupert Landscape, Tyson Krupp Elevator, Unlimited Restoration, VSC Fire and Security, and Whiteford, Taylor, and Preston. Again, so just a few administrative things before we get started. Everybody will be on mute. There is a chat box. For this one though, I think I'm gonna take a look at the chats and I may just unmute you and have you ask the question. So be prepared for that. Again, this is being recorded. And then there was a request that if we could put our company names next to our name, so you can do that in, it looks like most of you already have it up. So if you have any specific questions, you can just chat me separately and I can tell you how to do that. And to kick it off today, today's panelists are Erin Todd, Senior Manager with CohnReznick, Candace Zang, Assistant Vice President and Commercial Real Estate Portfolio Relationship Manager with Howard Bank, and Nancy Ferrell, Senior Vice President with NorthMarq Capital. And we're going to be talking about financial. I'm going to mute myself because this is not my forte, and Erin Todd is going to take it from here, and I'm going to manage the questions in the chat box and help out with just the back. So thank you so much. Erin, you can take it from here.
Thanks, Kristen. So hi, everybody. I'm Erin Todd. Like Kristen said, I'm a Senior Manager at CohnReznick, and I'm in our assurance practice, which I do audits and other attest services for my clients, and I'm in our real estate practice. So I work with investors, operators, developers, and commercial real estate across all asset classes. So again, thanks for having me this morning. And I'm also the treasurer of the board for CREWBaltimore. So we're just going to get started. Candace, I have a first question for you. Can you give us an overview of the different programs available to the borrowers and under the CARES Act? And what are you handling at Howard Bank?
Sure. So obviously there's, some federal programs and state programs. So just kind of going through the federal programs first, and I'm sure, everyone has at least heard the acronyms for the EIDL and PPP. Might not totally understand everything. I don't think any of us really do, but essentially the EIDL is the Economic Injury Disaster Loans. That was a fund of up to $2 million in working capital loans for small businesses, small agricultural co-ops, now small aquaculture, and a lot of private nonprofits, really just to provide economic support to help overcome the temporary revenue loss caused by COVID-19. At this point, they are not taking new applications. Unfortunately, a lot of these funds have already dried up, but those already in the queue from when the fund lapsed, it's my understanding that they are starting to process those again from the new relief funding. On the grant side, the EIDL essentially had an emergency economic injury grant for anybody who's applied to the EIDL, that you can actually receive a $10,000 advance not to exceed 3 months of cash operating expenses on the loan within, I think they were doing them within 3 days. And that's something that even if you get denied for an EIDL, you do not have to repay that. So that, if anyone was fortunate enough to get in on that, that was a really great program. It was only eligible to small businesses with fewer than 50 employees. And again, they're, I don't think, taking new applications right now. And then, of course, the Paycheck Protection Program, the first round of that was a $349 billion fund to keep employees on the payroll for companies that are less than 500 employees. It is 100% backed by the SBA, so it's something that banks felt a lot more comfortable about, because you don't have that chance of default from the borrower when it's guaranteed by the SBA. So, as you know, it just reopened yesterday for round 2 for another $320 billion fund. And then some of the Maryland state programs, we had the Maryland Small Business COVID-19 Emergency Relief Fund, and that was a loan. That was a $75 million fund, but the terms of it were 0% interest, no payments for a year, and then it converted to a 24-month term at a 2% interest rate, so very low, and that was designed for working capital for business operations. Unfortunately, that fund ran out April 6th, I believe it was. And then similarly, there was, for the same thing, working capital to assist disrupted Maryland small businesses and nonprofits. There was the Maryland Small Business COVID-19 Emergency Relief Grant, which was another $50 million. And for that, had to have fewer than 50 employees, and it was for up to $10,000 per applicant. Additionally, that fund is also out at this point. The Maryland COVID-19 Emergency Relief Manufacturing Fund was a $5 million fund to help Maryland manufacturers produce PPE equipment, for the first responders. And that was really cool that, we had so many in the local area that to take advantage of that, and kind of, that isn't their main manufacturing initiative, but it was neat that they were able to kind of switch gears and utilize funds to help out in that way. And that one just ran out last week, I want to say the 21st. But otherwise, the unemployment for those who were furloughed or laid off as a result of COVID-19, they stepped up to an extra $600 a week, with no 1-week waiting period, and extended how long the benefits run, which is 39 weeks this time. So a lot of, really great things. And it's not surprising how quickly everything has, run out. But, still great that we were able to do what we can. And, potentially there will be, they will re-up some of these funds.
And I did read earlier today that in the next round of federal legislation that they are looking for more funding for state and local governments. Mm-hmm. So that's something that I think hopefully will be available when this next round 3 comes out.
I think a couple, any of those, when they do open back up, I think there are still a lot of applications that were pending that, did not necessarily get processed through. So those will probably, be kind of the first come, but not to say that if anyone is interested in one of those funds, that if they do open back up, that, you certainly, I'm sure, have a chance and should definitely apply.
Mm-hmm. So let's talk more about the Paycheck Protection Program. I read that in order to qualify, you have to be able to certify that in good faith that the loan is required to continue funding ongoing operations. So what are you seeing as far as ways that the borrower should be able to support that this is needed? Is it they just check a box and they get the loan, or is there a little more due diligence that they might need to do?
Okay, so the Paycheck Protection Program is obviously a loan to incentivize businesses to keep workers on the payroll. And again, it's for small businesses, less than 500 employees. They're also eligible to use those funds to cover rent, mortgage interest payments, and utilities. So it's not specifically payroll, but that's what everything is designed around. We don't want people being laid off or furloughed or having their salaries cut. So, this is essentially an incentive to make sure that those things don't happen. Just a quick update on the terms. The loan amount would be 2.5% of average monthly payroll. So we're going to have to be able to prove that. There's a lot of documentation that goes into all of this. So, depending on if you're, sole proprietor versus LLC versus, nonprofit, there are different documentation, different tax records and things that are required. There, that's all outlined. But, there's specific documentation as far as what, would be needed to prove the need for the fund and the actual amount that you qualify for. But again, it's a great opportunity. It's a 2-year term, 1% interest rate, 100% backed by the SBA, and no payments for 6 months. The only thing with it is if you did get approved for an EIDL, that those funds needed to be netted out from the loan amount that you'd be eligible for. But there's a whole checklist of things. Like I don't want to really go through everything, but we've sifted through a lot of documentation with our borrowers. Our credit approvers have checked and rechecked. And on the application, if anyone has looked at or is familiar with the application, there are a lot of certifications just up front, at least, relying on the borrower to be full about. And that was, one of the things that I actually worked on throughout, processing all of these at Howard Bank, was going through doing the lender application, which really is verifying that the borrowers have certified to, things like being, a U.S. resident permanently, never defaulting on a government-backed loan. So whether that's, another SBA loan or even down to like a student loan. So there's a lot of different things with bankruptcy. It's just a lot of questions that, make sure up front that they would qualify. And then, once they are approved on the back end, obviously we are verifying all of these things. But, initially to even submit your application, I think you, as a customer, need to, in good faith, be able to, be prepared to kind of show all of that documentation to prove that what you've certified is accurate.
So you kind of started going into it already, but can you give us some insight into what's happening behind the scenes once the borrower submits an application for the loan?
Yeah. There's a lot going on behind the scenes, and luckily at Howard Bank we have an awesome team. So a lot of us have not worked on anything related to SBA. It's really more of our small business team that was familiar with this process. So commercial real estate, C&I lenders, small business team, the business bankers, our branch managers, like we have our credit team, everyone has been pulling together to get these through at our institution. And we actually were able to process for the first round 797 acceptances for $185 million in funding to small business owners. So we're really proud of that. I'm not sure what we're up to in round 2. I think the last time I got an update yesterday was like 125 applications. The E-Trans system yesterday was crashing, as I'm sure people have read this morning. So at that time, I think we only had like 15 or 20 acceptances, but I'm sure that number has definitely risen. But essentially what the process looks like internally is, we're taking calls, all of our frontline, like I said, the relationship managers, all of our lenders, and then even on the branch side, our business bankers, our branch managers are taking calls from customers and helping them through applications. Because, it's a confusing process, and you don't want to do anything wrong to have your application kicked back. But we're not perfect, and it was very new to all of us. So there was a big learning curve round 1. I think round 2, we've become much more efficient with everything. But, you know, do an initial review of all of the submissions, making sure that the application was filled out correctly and that all of the backup documentation, whether that's, you know, 941 records to show payroll or, you know, different 1040s from your tax returns, you know, the front line is doing an initial review with the customer, and, you know, making sure that we can get to the calculation that they got to. And then we would move everything on to our credit team, who is doing a much more thorough review and making sure calculations are accurate, any adjustments that need to be made. So, you know, there are things like for any employee who makes over $100,000, you can only count $100,000 of their income. So there's like different, you know, minor adjustments that need to be made, you know, throughout the process. And we have kicked plenty of applications back or said, you know, we need to, you know, round your figure down, making sure that the borrower is okay with that before we proceed. I mean, they don't really have a choice. They pull their application or they accept the lower amount. But, you know, there's a lot that goes into everything before we can even submit these applications to the SBA for approval. Like I referred to a little while ago, there was a lender application sheet we're really going through and certifying that every box that was checked and initialed on the application. It was a very tedious process. I think Ann Waring's on the phone here. She had helped out with that as well. And, you know, the first weekend, we had probably 100 people working 16 hours on Saturday and Sunday when we should have been, you know, with our families. So, you know, we've really put a lot of effort into, you know, making sure that there are no bumps once these applications get submitted. You know, we don't want our, you know, customers thinking that they were accepted and then getting declined because, you know, one box said, no, I'm not a U.S. citizen, where, you know, they just went down the line and checked yes, yes, because all the other questions you want to say yes to. So just little things like that. And then, yeah, it moves on to an input team to actually put everything into the eTrans system, which is the system that, you know, connects banks to the SBA. And then really just would kind of a waiting game from there, waiting for acceptance, confirmation, you know, logging everything in as far as who we've gotten accepted, notifying customers. And then it gets to the fun part of having to close everything within 10 calendar days. So we actually engaged some additional legal help to help us with the documentation, because 797 loans the first round is a bit much for the team that we have in place. And so, you know, just kind of coordinating the checklists of due diligence items, you know your customer, beneficial ownership, a lot of, you know, just certifications that are needed on a compliance standpoint. And, you know, because these files will get audited, you know, later, as with any loan that comes under review. And then it kind of moves on to opening new accounts and funding the loans. And we'll talk a little bit about the new accounts, which is, you know, really just to kind of track the funding and help the customers out. But then, you know, once the loan's funded, it goes through our booking team, and hopefully everything has been done properly along the way there. But yeah, some of our bankers had to learn really quick, and, you know, it was just great to have everybody pitching in and trying to figure out what we needed to do in the process. And some, you know, larger banks I've heard have been difficult about accepting the PPP applications because of how much work is entailed in it. And some of them were slow to start, but then invested in software that's like a bot, basically, that's able to efficiently process applications for them. So they will definitely have the advantage this second round, especially with the new guidance that the first day, each bank was allowed to do a bulk upload of like up to 5,000 applications, just a kind of data dump. So, you know, the fund's going to run out much quicker this time, but that's pretty much what's entailed. So, you know, if you have an application pending and haven't heard anything for a few days, don't worry. It's a time consuming, you know, really tedious process.
And so once the borrower is approved, you said there's 10 days to close on the loan?
Mm-hmm. Yep.
And is it a one-time funding, or do they draw down as they need it?
No, it's a one-time funding, and then kind of from there, the account will be managed as far as transferring into payroll accounts each month or as necessary, or other accounts to fund utilities or the other applicable uses.
Mm-hmm. So what can you tell us about the forgiveness piece of the loan under the program?
I haven't heard all of the final guidance yet, but the initial criteria is really that you have to be able to clearly prove that the funds were used for what they were supposed to be used for. So again, that's why we are funding into a separate account for all of our customers, just so that it is much more transparent, easier to prove, where the funds, specifically were used for. They can, like I said, transfer into their payroll account or their, operating account when they're cutting checks for rent or utilities. But the eligible payroll costs that can be forgiven are salary, PTO leave, healthcare, insurance benefits, state and local payroll taxes, and then the other things I mentioned, like the mortgage interest payments, rent, utilities. On that side, they can't be more than 25% of the loan, the non-payroll expenses. And all of the costs in order to be eligible had to be costs that existed when the program started on February 15th. So things that are not going to be eligible to be forgiven are things like payments to independent contractors, cash compensation in excess of $100,000, federal payroll taxes, and then like some of the sick and parental leave that qualifies under the other program, the FFCRA, that is specific to the COVID relief. And really just gonna have to prove that all of the same employees stayed on or getting paid the same amount as before. And if there is a reduction to any of that, I don't think that you are ineligible for forgiveness. I think it's just that it would get reduced. So again, I don't have the final guidance, but those are kind of the initial guidelines that I've seen. And
the auditor in me is hoping that everybody's keeping everything nicely documented, so that
yes,
when it comes down to it, you have everything lined up nicely that you can kind of prove what you spent your costs on.
Yeah, definitely.
Erin, I have two questions.
Sure.
So one is from Joan Renner, and it's a question for the group. Do they think COVID-19 will impact phase 1 or property condition reports? And if you can just mark that, and we can get back to it later when we start talking about lending. And then the other one from Kathleen, not sure if this has been covered, but if this goes on longer than 60 days, will there be another round of financing for another 60?
So that is going to be completely up to the government and SBA discretion. We have not heard anything to that extent, but it's a great thought, great concern.
Yeah, I have heard that they are working on additional legislation now for more funding, and I think they are looking, since it seems like it may extend beyond 60 days, it is something that's being considered.
Yeah. I mean, I think everything, across the board right now is in flux. And I think, everybody's been super reasonable the first go round. So hopefully that will continue, whether that's, just relief from your bank or, the payment deferments on any of these SBA or government-backed funds. We all want to see everyone succeed.
Right. Do you, I think Joan's question was about PCNA. Do you have any thoughts on that?
I do not. I am very interested to hear what everyone else says. I don't know if maybe that's a question for Karen. The environmental side.
How about we
I'm concerned.
yeah, we can keep a list of these questions that we're not able to answer right now, and maybe at the end of the call, if other people on the that are participating have
open it up.
on it, we can open it up to that.
Sounds good.
All right, so let's talk about the other side of it. So you have a loan that you've had, you know, for 5 years already, and now your operations are being impacted, and so you are requesting deferrals. One question that we got prior to the call was, why are some banks offering full loan payment deferral versus interest only?
Yeah, thanks for that, Tony. I mean, I think that's a completely individual circumstance. You know, our bank, like every other bank, is receiving a lot of requests for payment relief, and everybody has their own strategy. I think there's a lot of factors that go into that. Bank by bank, as far as if you have shareholders to report to versus being non-publicly traded, what your liquidity stance is, what your portfolio makeup is. If there's a lot of restaurants and hotels in your portfolio, that may be something that you want to or need to reserve for, or things that, I mean, I know we initially at Howard Bank on the commercial side reached out proactively to each of our clients, just kind of, obviously first and foremost because we care, we want to make sure everybody's doing okay, but really to kind of get an idea of what they expected, as far as what's going to happen with their tenants or their businesses, and just kind of trying to get that baseline of across the board, how much, in relief do we think our customers are going to need. And again, that's going to vary by bank to bank. We want to do everything we can to help our customers through this difficult time, but at the end of the day, we need to make sure that we're still able to remain profitable enough to be here for them in the future. So it's a tricky balance, but we have great leadership at Howard Bank that's being very thoughtful, and everything is case by case with us. We have a baseline of what we're hoping to help our commercial customers with, but we realize that all situations are different, and try to be thoughtful of those in a more dire need and that they may need additional consideration. So but I've talked to bankers from all over Maryland at varying size banks, and there's a lot of similarities in everyone's approach, but there are definitely some that either feel they can get away with, not requiring as much to document these requests, or can, take a little bit more of an aggressive stance than others. But I think, everything's individually, case by case, like it is with everything in commercial. That's why we love commercial, because it's not just cookie cutter,
Exactly. Nancy, what are you seeing on payment relief offered to borrowers?
Well, where we are is we're seeing a variety. First off, with NorthMarq Capital, we, compared to a local bank, we have 50 some offices across the country. So we're servicing probably about $60 billion worth of debt. Most of it's with life insurance companies. And there is a significant amount of payment relief in our office right now. I think we have about 35 submissions for some level of relief. But there really has to be a need. The borrower has to make their April payment, which I think most everyone has done. And then the typical payment relief is 3 months of debt service. And after that, then the lender will revisit where the situation is for that particular loan. And, but generally they want to see where the status is after 3 months. And then some lenders will leave it as is and move on from there. And others will do some additional relief. It depends on the loan situation and the borrower and what have you. But generally, they're requesting that the 3 months relief gets caught up over the time of the next, over say, anywhere from 3 to 6 to 9 months, depending on the particular situation for each, borrower. So, we're spending a lot of time on that rent relief, and we're working with our lenders on how they want to, position themselves for, granting rent relief as well.
What type of due diligence are you doing? Like, kind of documentation are you requiring from the borrowers to support that they would need the deferral?
It's in the life company world, it's fairly significant. Each life company may have, more relaxed information that they want to see, but basically you need to submit a written request from to our servicing department for that particular lender. Let's say it's Allstate or National Life of Vermont or what have you. And they're going to look. They want to know the detail of how much they're expecting to lose, how much relief they're going to need. They're going to require 2018 and 2019 financial statements, and then year-to-date operating statements, and then a 2020 budget. They're going to want to see current rent rolls to see how many tenants are in occupancy. And they're also going to look at the borrower and guarantor's balance sheet and financial statement on the guarantor as well. And, also they want the general information of the tenancy in a building or multiple buildings in some cases. They want to know where the tenants are. Have they actually closed their doors? Or have they actually vacated, or do they have a plan to reopen? All of this due to the coronavirus. So there's a lot of property out there, commercial real estate property, where the tenants are not allowed to be in that space if they're not a essential provider of some goods and services. When we do property inspections, it's kind of interesting because a lot of tenants aren't there. And there's very few cars in parking lots. So we're doing our best to confirm, which tenants will stay in occupancy when this all comes back to reality. But there's a significant amount of information that you really need to submit in order to have the lender grant relief. We've had a lot of folks that are borrowers that, they just want to understand, can they get relief? And basically we just had someone who said, well, we might have tenants leaving, next month. And that, gets pushed aside because you're working on the ones that really need relief and have tenants that are not going to be able to make it or what have you. Yeah. So the focus is on the tenants that need the relief the most, and the overall the life companies have been very generous in approving relief.
Yeah, I think I'm actually glad to hear that there are people asking for more than we are, because I've had some of my customers say, I don't have time to put that together for you. I'm like, well, I can't just go off of a verbal, ask, but I think, as far as what I have done, I've only had a handful. My portfolio is smaller than some others on our team that have definitely had more. And again, kind of varying levels of relief, but most of what I've been able to grant so far has been like a 90-day of interest-only payment, and kind of see how things are. But I, have had exceptions for those that could show that they could not even, make 1 month of a principal payment. And, again, everything's case by case with us. But really, we're looking for updated rent rolls that are very clearly stating, the specifics of what's going on with those tenants. So we want to compare to where were you before all of this started. Your payments needed to have been current before, before all of this started to be eligible for some kind of relief now. But also, we really just want to see what's going on with your tenants, who has paid you for April, who has not paid you, what concessions have you already agreed to for what time period, and really just kind of get, make sure that we're on the same page with our clients as far as, what the expectation is going forward. So, we would want to, have this updated operating statements and everything. Like it's really comes down to just being able to document the file and being able to prove that there, is cash flow stress as a result of COVID, not just cash flow stress.
Right. Have you found that your borrowers are getting the information that they need from their tenants?
Yeah, for the most part. The one I was just referring to has I think it's just a one case situation. But yeah, I think for the most part, they've been turning it around. I mean, they need to, like, if you are serious about this and you don't want to let your loan go into default and that you need this relief, I think that's, enough motivation to do the work and kind of get these things together. And, it should be the same on the side of getting things from your tenant. They are asking for relief from you, right? So.
Mm-hmm. Here's another question for Nancy and Candace. What has volume been like for new loans unrelated to PPP and refinances? And what changes have you seen in the way that you're originating loans now compared to pre-COVID?
You want to go, Nancy?
Sure. I would say on the commercial lending side right now, it's a bit slow. And part of that is many of the lenders are working on forbearance and trying to figure out what they're going to do with the loans that are, have issues right now. And then they're a little hesitant about putting out new loans because they don't want to add to, any other problems they already have on the table. It's hard to tell if you make a new loan right now and you've got, say, 10 tenants in a building or whatever, you're never sure whether one of those tenants may go out of business. So they're really trying not to add to the pot that they already have. So they're doing much more due diligence. They're much easier working with a well-known, strong borrower. So those borrowers are in good shape, and they're not too worried about how they treat their tenants. And if tenants leave, they have plans in place to, reposition them or what have you, or they have the ability to continue to pay their own mortgage payments. I think a lot of the issues that we're also having in the closing process is getting the due diligence that we need and the closing items closed. The recordation of the loan, et cetera, can be challenging right now.
Yeah. I mean, at Power Bank, we are still lending, so I am happy to report that. We have plenty of capital to make loans. And honestly, I think we're looking for the same criteria as pre-COVID right now. Experience, references, equity, recourse is, now a must. We're not really doing any non-recourse at this point. Location. But like Nancy said, established customers or stabilized projects, we're going to be much more comfortable with. We'll be a little more risk adverse at this point. I haven't had any recently, but I think startups will probably have difficulty. But we, as far as volume, we've had plenty in our pipeline that we're still working to close. We have, had plenty of our customers that are reaching out, just, verifying that we're still lending because they have 1031 exchange money that they need to utilize and only have so much time to use that. We've been seeing some refinances either after other banks haven't been treating them well through this situation, or just maturities are coming due and their current bank either won't renew it or aren't, giving competitive enough terms. So, we're still seeing activity. We're seeing a lot of activity on our C&I side also, with just kind of working capital lines to businesses, that maybe didn't qualify for, any of the government-backed programs. But we're definitely still in business to make loans. And
yeah, and on our side, because we pretty much are non-recourse lenders. Most of the life companies are non-recourse lenders. Some will have small recourse, some level, but minor. And what we're doing there is where there are issues. We have a couple loan closings right now, and there's a couple tenant issues in there. One of which just asked for forbearance yesterday, and we're trying to close the loan, tomorrow. But so we're using things like a master lease with the borrower, property owner, to cover any potential risk, and that's how some of the life companies are doing, kind of mitigating that risk by having an overreaching master lease that kind of covers any potential issues for any major tenants that might come down the road. So if that major tenant were to leave and it was putting the property in not good shape and at some point, you can put that master lease in place, and it gives them the time they still make those payments, but they have the time to, find new tenants and, rectify the situation.
Yeah, that's a good point. That's actually something I want to note to bring up internally at our next meeting. But what Nancy mentioned before about, you can have a stabilized property, but how do you really feel comfortable that it's going to remain stabilized and everything during this time? I think that's the biggest concern for us as far as why we need those personal guarantees right now. And potentially that could be something that is negotiated as far as we need this to close the loan. But as situations change down the road, once we get through this pandemic, at that point there's a relook and reducing or getting rid of the guarantee altogether once it gets back to a point where we would have been comfortable approving it non-recourse prior to all of this.
So one group in the agency side is going gangbusters, and that's Freddie Mac and Fannie Mae and HUD. They're all open for business. They're swamped, but their rates are in the 2.75% to 3.25% interest rates, and each of them have their own programs, but they're all very active, and it's basically all multifamily. And right now, if you have an apartment project, you're not allowed to kick out your tenants. There's I don't know exactly what they call it, but it's kind of a required.
How would you even do that right now? You're not going to coordinate.
If they wanted to. Yeah. But in many cases, in most situations, that's a blessing in disguise for property owners of apartments, because their tenants are in place. They may be giving them relief, but they're in place. And once they get their jobs back and what have you, they go back hopefully to full rent, what have you. So
right.
They're helping out their tenants significantly. And at that same time, you're also dealing with, right now, the agencies are tackling student housing. Right now, when these students go back on campuses, and how that's going to work out in one section, as well as tenants that have still issues to deal with paying their rent, etc. But they're still trying to figure out how they're going to manage the student housing side of the agencies. HUD will probably do that better than anyone, and all three agencies are super busy, but they're taking on business, and they want to keep it going. So that's been a shining light for the multifamily industry.
What types of real estate do you think are going to be hardest hit? And who do you think is going to fare a little bit better?
Well, I think retail is number one, and office is number two in my book. And industrial is doing well. I mean, Amazon just bought a brand new building out in the, in the airport area. So I think the industrial side is still in pretty good shape, probably more than anything else. And then, as I mentioned, the apartments are getting relief, and that's working out with help with having requirement of not allowing them to be able to kick them out. So that's helping that side of the business. But retail is tough. If it's non-essential, it's been their doors are closed. I mean, the malls are closed, and it's going to be interesting. I wish I could predict it, but it's going to take some time to turn around as people have been used to getting more used to online shopping and that kind of thing. But I think the bricks and mortar will come back, and in the retail industry. And I think people are ready to get out of their houses and go to the mall. On the office side, I think that's going to be interesting, because if again, let's say you're in an office building and you're in, you've got cubicles all over, your whole floor is cubicles, and yet you're trying to distance employees. So I think that they'll probably be rearranging their setups and how their floor plans lay out. And I would think their tenants are probably going to be requesting that as well. So that's kind of a to be seen situation. But I can tell you, we had a conversation with people from a couple of different other companies, real estate companies, and somebody was saying, well, gosh, do you think our employees are going to come back to work? And they're all like, yes, we can't wait to get out of the house and go back to work in a work setting where you can actually be more focused, and particularly if you have kids running around, that just creates a lot of chaos as well. So, and even with our lenders, I was talking to Genworth yesterday, and he's like, can I just call you back in an hour, because at that point my kid will be in like technical school at home doing their homework, and I have I'll have like 2 hours to actually talk about business. So it's been kind of interesting to watch how families have managed this. So, and all our lenders across the country, Securian, they're all like us. They're working from their computers and they're working from their homes.
Yeah, I think that's part of what's been so kind of uniting about all this, is that everybody is home, and we all understand we might be different situations with our family or with what our work is like, but I think everybody has this a challenge. May not be the same challenge, but we all understand that we're just trying to get our work done, take care of our family, take care of our house, everything else that's going on. And I think there's a lot of compassion and understanding, which is probably a silver lining to a lot of this.
Definitely.
Yeah, I'm jealous of your other lender. His kids actually have a specific time that they sit down and do everything. I have teenagers that lasted for like a week, and now they sleep until noon. They do night school and stay up till 3, and I hope they got everything done, but I don't have the time to hover over them and make sure. So,
well, my daughter moved back in with me because she lives in New York. And I don't think she's, even when they open up New York, I don't think she's going back for a while.
Don't blame her there.
We have a few minutes left. We have one other question, and then from this point forward, if you guys have questions, there's like a little wave button that you can use if you want to try that. Otherwise, you can just use the chat. Any guidance on W-2 employees who work on 100% draw against commission? Are we eligible for PPP? And that was from Tim Harrington.
I don't know the guidance offhand, but I can definitely get something over to you.
Okay.
Because I there's very specific stuff for each kind of scenario that we've been given, but yeah, that's a good question.
Dottie, you had a question?
I work in the commission-only industry, and we are eligible for those loans. I haven't applied for them myself, but I have a lot of colleagues who have.
I feel like there's a way that, almost everyone, in true small business is eligible. It's just finding the right piece of documentation. And, if, that specific line item, was filed in the way that they, want to see it on your financial.
They're basing it on your 1099s.
The problem is when I'm not a 1099, I'm a W-2, but I'm 100% commission. So I think it's a gray area.
Yeah.
I'm with Terry. I'm the same as Terry.
And I can't find guidance on this no matter how hard I try. So Candace, if you can provide something, that would be great.
Yeah, I'll look into it and I'll shoot you an email.
Thank you.
Include me too,
Okay.
please. Thank you.
Sure.
Any other questions or anything you've been seeing in the industry? Feel free to open it up.
Yeah, I mean, I think, Nancy had started talking a little bit earlier about some challenges that we're facing with new loan closings. And this is really more, and I don't know who, exactly who else on the phone, but obviously we're all having issues with redefining how we're networking. But, two of the biggest things that I've been having issues with closing new loans is, number one, appraisals. The timing to get an appraisal back is extremely extended. Even to get a couple bids, or even to get one bid in some cases, has been challenging. The pricing is much higher. What I've seen, they don't know what comps to use. They don't know what cap rates to use. That's, those are some, of the challenges I've seen on the appraisal side. So I would really love to hear if anyone has any insight to that. I know we talked about potentially having that as, a whole nother panel, but just so that everyone else knows, when, you're applying for a loan, it's something that could be a challenge, just as far as valuations go moving forward. And then, the whole title work, with, having very limited staff or no staff in the courthouses. I've heard varying things from title companies. So again, I don't know if anyone is on the phone from the title side, but some of the companies I'm hearing are not willing to insure their client for the gap between closing and whenever the courts, open back up to get documents recorded. So I've had one that we were ready to close and all of a sudden had to go to an entirely new title company just to be able to move that forward. It's hard to get title abstracts during the pre-closing process.
And as we were speaking I was looking for ideas for next week, and I'm going to do my best to put together a panel on appraisals and title companies for next Tuesday. So I'll be able to pull that together this afternoon, and you should see the email come out tomorrow. But that's how these are coming about. It's like somebody, you guys voice a concern or I need some more information on this, and these are how these webinars are coming up. So they're really for you guys. So any other ideas? We will be doing an emerging trends, just thoughts, ideas, things that we're already seeing come out of the pandemic, and that's going to be later in May. And we're gonna redo another one with our property managers on re-entry plans later in May, as these start to come together, because it's still too early. I think it's like we just found out what the state of Maryland was doing on Friday, so we've got now we need to start thinking about it and when that's going to happen based on the timing. So
something else might be from like the construction side, because I have had one or two of our borrowers who know that they have a conversion date coming up on their loan with us, that are just kind of informing either their projects were halted or slowed due to staff or material availability, or whatever the case may be, and need to extend kind of that construction period or lease up period. So I would be interested in kind of hearing more of what's going on the construction side, because hear some things that, hey, people are still working in certain areas, but I'm sure that there are, varying levels to that.
Yeah, I'm absolutely happy to put that together as well.
Kristen, one thing might be interesting as you're talking about moving back in re-entry into office spaces. If you wanted, I'm more than happy to talk about office design and how there might be small things that offices might be able to do to help distance people, especially in workstations.
Yes, absolutely. That's going to come up in our emerging trends for sure. And I can circle back with you on that right after this. Okay, perfect. Sorry, I'm just reading comments here. All right. Well,
Can I put a quick plug in for the Maryland Food Bank?
sure.
If you don't want to go out of your house and you don't want to, you don't want to put yourself in, putting food on a conveyor and packing it up, a donation is significant for them. And they're right in our backyard and they're part of Feeding America, but they do a great job, and I know they're swamped right now. And I'm sure their donations would be greatly appreciated.
Thank you. Yeah, good point. Very good point. All right. I'm going to give you 2 minutes back in your day. Thank you so much, everybody.
Thank you.
Guys, stay well.
Yes, thanks.